Welcome. My name is Thomas Allen Munn, and I'm the author of Payback: Why the Top 1% Must Invest in the Rest and How It Can Renew America. I wrote Payback to deal explicitly with an ongoing trend that politicians of all stripes have refused to admit exists. Over the last 40 years, the gap between what it costs to live the American dream and the market income of ordinary workers has widened from a gully to a canyon. This canyon now threatens the future of the middle class, and if nothing's done, Americans with ordinary skills will fall out of the middle class. Payback proposes a tax policy that will enable capitalism not only to save the middle class, but to grow and make it more prosperous. Since Payback digs deeply into the weeds, I've recorded this Q&A to give readers a quick take on it. To make the Q&A easier for readers to digest, I've divided it into 15 sections. Payback is free to read on a website that I've created for the convenience of readers. It's my hope that Payback will contribute to a national dialogue on tax policy that I believe will take place sometime in the next decade. Now let's get started with the Q&A. Part 15. The AmeriShare tax may be the last chance to salvage the American dream. Suppose you're right. Why do you think politicians will turn to the policies advocated by the AmeriShare tax? In a word, fear. I believe that all politicians, particularly the successful ones, respond to the fear of not getting reelected, which means neither denying anything the majority of the voters want nor doing anything the majority doesn't want. Since the majority of voters don't want to either cut social insurance programs or raise taxes, the politicians will face a Hobson's choice. Either get blamed for cutting social insurance and lose, or get blamed for raising taxes and lose. Politicians, being a clever bunch, have an escape hatch which will enable them to avoid a Hobson's choice trap. So what is it? Over the years, the President and Congress have escaped blame for unpopular actions by creating an independent bipartisan commission comprised of elder statesmen from both parties and leaders from all walks of life to absorb the blame for doing what must be done. I discuss this in some detail in Payback. For now, however, I'll cite the Simpson-Bowles Commission appointed by President Obama in 2009 to cope with the Great Recession as what I expect the politicians to do here. It's been a decade since the Simpson-Bowles Commission came and went, and nothing happened. What does that example have to do with existing tax reform based on the AmeriShare tax principles? Well, an awful lot. Simpson-Bowles developed a tax reform plan which both raised significant revenues and cut tax rates. It was a reform plan which closely approximated the ideal of the normal income tax, which I discussed earlier, because it purged the personal and corporate income taxes of almost all tax preferences. Simpson-Bowles made only one mistake. It was ahead of its time. Unlike 2009, when America could still borrow huge amounts at cheap rates without putting its financial house in order, it won't have the same luxury after the next calamity. The debt market will see to that. As the child of the Simpson-Bowles plan and the grandchild of the normal income tax, the AmeriShare tax's core principles, ending tax preferences and cutting rates, will be the blueprint for putting America's financial house in order. What makes you so sure that a commission modeled after Simpson-Bowles would propose a plan based on the principles of the AmeriShare tax? Because virtually all experts on tax policy agree that if taxes have to be raised, the best way to do it is to get rid of tax preferences so that tax rates can be kept as low as possible and end the political practice of preferring politically favored taxpayers. Otherwise, tax rates would explode through the roof. Also, I think the necessity of lowering the debt to GDP ratio will force a change in the existing political dynamic which welcomes the use of tax preferences. Explain what lowering the debt to GDP ratio has to do with changing the political dynamic regarding the use of tax preferences. Everything. Since I don't believe politicians would dare to cut social insurance in the wake of a calamity, I believe that lowering the debt to GDP ratio would force a huge increase in taxes. All right, explain why a huge increase in taxes changes the political dynamic regarding the use of tax preferences. To explain this, I'll have to get even deeper in the weeds. Do I have your permission? Sure. If there must be a huge tax increase, 3 facts would drive the political dynamic regarding the use of tax preferences. First, every tax preference loses revenue, which loss must be made up by increasing tax rates on taxpayers who don't benefit from them. Second, Hardly any bottom 90% taxpayers get any benefit from tax preferences. Third, the top 1% of taxpayers save billions in taxes because of tax preferences. This means that tax preferences are the enemy of almost all the bottom 90% taxpayers and the darling of only the top 1% taxpayers. Stop for a moment. Why do you say that tax preferences are the enemy of almost all bottom 90% taxpayers? Well, it's simple arithmetic. Tax preferences lose revenue and force the bottom 90% of taxpayers to pay taxes at higher tax rates compared to what they would be if they didn't exist. Explain why you say tax preferences are the darling of the top 1% taxpayers. Again, it's simple arithmetic. Tax preferences save billions for top 1% taxpayers compared to what they would pay if they didn't exist. Since tax preferences are the enemy of the bottom 90% taxpayers, how have they survived this long? When almost everyone's taxes are cut, taxpayers don't fret too much about not getting the biggest cut. But when almost everyone's taxes are raised, particularly by a lot, taxpayers will raise hell if they think they're getting shafted. Since there's been no major tax increase in over 40 years, there's been little pressure to rein in tax preferences. A huge tax increase, however, would force politicians to choose between a sharp increase in tax rates for almost everyone or a sharp curtailment of tax preferences that would primarily affect only the top 1% taxpayers. I understand your point. How do you think it would play out? Given that tax preferences are the enemy of almost all bottom 90% taxpayers and the darling of top 1% taxpayers, I believe that the fear of riling up the bottom 90% taxpayers will trump the fear of riling up the top 1% taxpayers. Until it's possible to cut taxes, I believe that the political dynamic will favor dramatically limiting the use of tax preferences rather than increasing tax rates. So far, you've explained how you think the politicians will deflect the blame for raising taxes and why you think that almost all tax preferences will be ended. Now explain why you think that the taxes will be made more progressive as proposed by the AmeriShare tax. Because for the last 40 years, both income and wealth have so concentrated in the top 1% that it threatens the economic, social, and political fabric of America. The best and least disruptive way to deconcentrate income and wealth is to make taxes more progressive. I think that after the next calamity, the political dynamic will not only rid taxes of most tax preferences, but it will also force markedly more progressivity in taxes. How progressive? It's easy to set the bottom and top thresholds and tax rates, but not so easy in between. I think it will be hard to argue with the top and bottom brackets included in the AmeriShare tax. The top being an effective tax rate of 55% for those with incomes above 100 million and zero for those whose income is less than 125% of poverty. In between, it gets harder because of the ongoing need to monitor several factors on an ongoing basis. If you want me to get deeper into the weeds, I'll lay them out. Do it. All right, tax rates should be set annually based on, first, what the revenue needs for that year are. Second, what the relative growth rates of the income of taxpayers in each bracket are. Third, what the proper balance between the income available for consumption and investment should be. It's not clear why these factors are important. Please spell it out. As to the first, to keep interest rates down, America must keep its debt to GDP ratio under control. To do so, tax rates must be set each year at levels which will raise enough revenue to keep the debt to GDP ratio at levels acceptable to the debt market. Explain the need to monitor the relative growth rates of the income of taxpayers in various brackets. As the economy changes, those in some brackets may leap ahead in terms of income and others may fall behind. Tax rates should be set annually to assure the proper level of progressivity. Finally, explain what you mean by the proper balance between investment and consumption. As I've said before, for the economy to grow as fast as possible, it must produce the maximum possible amount of goods and services for consumption. And to do this, there must be enough capital available to produce them. This means that there must be a proper balance between the income available for consumption and that for investment. To the extent that changes in the economy disrupt this balance, tax rates should be adjusted to correct it. You're suggesting that tax rates be set annually based on your three factors, each of which involves a great deal of complexity. How do you expect politicians to contend with this? I don't. That's why it's an important part of the Amerishare tax for the President and Congress to set up an independent, nonpartisan tax board, similar in structure to the Fed, to annually set tax rates and recommend policy changes to the President and Congress. Once a tax reform plan is put in place, annual adjustments to tax rate should be based on economic factors, not politics, and should be administered by experts. Modeling this tax board after the Fed makes sense because the tax board should set tax rates and make policy recommendations using the same type of expertise and analysis that the Fed uses in setting interest rates and controlling the money supply. Would Congress and the President cede all of their control over to setting tax rates to the tax board? No. Under the Amerishare tax, Congress could override any action taken by the tax board by a 3/5 majority vote in both houses with the approval of the President. In effect, Congress and the President could let the tax board absorb any voter wrath resulting from setting tax rates, but they could override it if they both agreed. What makes you think that the politicians would ever turn over this much power to a bunch of intellectual policy wonks? It's not as unthinkable as it appears. Again, I believe it would be fear on the part of the politicians that would motivate them to do this. For the last 40 plus years, the politicians have enjoyed the luxury of doling out tax cuts to favor groups, which has enabled them to please many and anger few. After the next calamity, however, taxes will have to be substantially increased, and it'll likely be many years before the debt to GDP ratio will be low enough for there to be more tax cuts. While it's great to control tax rates in an era of tax cuts, it's dangerous to be in charge of tax rates in an era of tax increases. So I think that there's a fair chance that the politicians will find it appealing to dump an unpleasant responsibility onto the policy wonks rather than accept responsibility themselves. Moving along, you've explained why you think the political climate will grudgingly accept the need for a huge tax increase, will turn against tax preferences, will insist on greater progressivity in taxes, and will see the benefits of having a tax board make tough decisions and absorb the blame for doing so. Now explain why you think the politicians will replace the existing payroll tax, corporate income tax, and estate tax with a single tax on personal income. All right, let's do it. Start with the payroll tax. The payroll tax is horrendous because it does great harm to social equity, unduly burdens social insurance, distorts the job market, and fails to finance Social Security and Medicare. If it's so bad, how has it lasted this long? Inertia. The political climate that will emerge from the next calamity will be much more hospitable to progressivity in taxes and expanded social insurance, and less hostile to tax increases. In this new environment, I think that replacing the payroll tax with a personal income tax will have a lot of appeal. Explain the arguments you think that will have political appeal. The payroll tax taxes the poorest of poor workers deeper into poverty. Unlike billionaires who can avoid millions in taxes because of their tax dodges, hamburger flippers and nail salon workers pay 15.3% on every dollar they earn. The payroll tax literally takes food off the table and reduces tens of millions of full-time workers to a standard of living of bare subsistence. I find no justification for the payroll tax. Explain how it unduly burdens social insurance. What the payroll tax taketh away, the politicians to some extent giveth back in the form of social insurance programs like Medicaid and food stamps, and tax gimmicks like the Earned Income Credit. Many social insurance programs could be scaled back and the EIC could be ended by replacing the payroll tax with an income tax and making targeted increases in social insurance. There's no easier way to provide cash assistance to those in poverty than letting them keep more of what they earn. Explain how it distorts the job market. The payroll tax taxes work done by humans but not work done by computers and machines. The payroll tax is both a financial and administrative burden on employers, and as such, it provides an added incentive for employers to automate their businesses. Natural market forces are encouragement enough for employers to automate their businesses without having tax policy add to it. Finally, explain how the payroll tax fails to finance Social Security and Medicare. Easy. All anyone needs to do to answer that question for themselves is to read the executive summary of the annual trustee reports for both Social Security and Medicare to see the shortfall in funding from the payroll tax. Because of the chronic underfunding of these programs, either benefits must be cut by somewhere around 30% or new taxes added. In the political environment of the future, I'm confident that it will be politically unthinkable to either cut benefits or increase the payroll tax. I believe that a consensus will emerge that Social Security and Medicare should be financed from the income tax. Now that we've finished with the payroll tax, explain why you think it's politically possible to replace business taxes with a personal income tax. This one's easy from the standpoint of reason, but almost impossible from the standpoint of emotion. Explain the reason for your answer. It's an indisputable fact that taxes paid by business entities like corporations, partnerships, LLCs, trusts, and other similar organizations aren't borne by those business entities, but by their owners. Those business entities don't eat, drink, and breathe. They're no more than dusty old legal documents languishing amidst business records. Taxing business entities for business profits, as opposed to taxing their owners, is an inefficient way to raise revenue. Thankfully, the corporate income tax, which now accounts for less than 7% of total revenue, has become a far less significant part of the revenue mix than it used to be. It's my hope, but more than my expectation, that taxing business entities will die along with tax preferences. Again, I want to emphasize that business income should be taxed once when it's received by the owners of the business. Sounds like you're not optimistic about ending taxes on business entities. Is that so? Yes. Emotions, unfortunately, play an outsized role in politics and are almost impossible to overcome. What are the hot button emotional issues that getting rid of taxing business entities so difficult? Many voters believe that taxing business entities is a magic way to raise money without taxing people. The best analogy I can think of is the willingness of many people to tolerate insurance fraud on the belief that it's the insurance company, not the premium payers, who pay for fraudulent claims. Getting rid of the something for nothing mentality among voters is a tough sell, maybe too tough to sell. Does this mean you've given up on junking taxing business entities? Not entirely. It's my slender hope that in general tax reform, when the whole system comes under scrutiny, the experts will decide efficiency and economic growth must overcome myth. Taxing the owners instead of their businesses would both enable businesses to grow without having to contend with tax policy and greatly simplify taxation. Since no business profits would escape taxation, it's possible, if not probable, that business taxes could be replaced by a reformed personal income tax. For those who want to know more about the best way to tax business profits, please read Payback. We're now down to replacing the estate tax with a personal income tax. Why do you think that's politically salable? I think that after the next calamity hits, the political climate will be more receptive than in the past to replacing the estate tax with a personal income tax. It's a virtual certainty that income and wealth will be even more concentrated in the top 1% then than now, and that something should be done about it. I'm confident that if the voters thought much about how the estate tax works and who it works for, public opinion would turn against it. So, what should voters be thinking about regarding how it works and who it works for? As a revenue raiser, the estate tax is leakier than a colander, and instead of reducing the overconcentration of wealth, the estate tax actively aids and abets further concentration. It permits a few lucky individuals who just happen to be born to the right parents to inherit huge amounts of unearned income with relatively little tax liability. I believe that most voters believe, and I believe in two principles. First, all Americans should have an equal opportunity to become the best they can be, and second, those who accomplish the most should have more than others. The estate tax frustrates both principles by unduly favoring the wealthy. Explain why the estate tax frustrates both principles. Taxes on billions of unearned income that escape taxation because of the estate tax could be used to provide educational opportunities to those who can't otherwise afford it. In today's world, opportunity is an empty word for those who can't afford to get the education they need to compete. While those who accomplish the most should have more than others, inheriting unearned income isn't much of an accomplishment. I think most Americans believe, and I believe, that each generation should be able to give the next generation a leg up. But I don't think that this means that any generation should be able to transfer huge amounts of untaxed, unearned wealth to succeeding generations. What do you mean by a leg up? The easiest and fairest way to enable each generation to give the next a leg up without contributing to the further overconcentration of wealth is to pick a number, probably somewhere between 2.5 million and 5 million, and permit individuals to inherit that amount exempt from taxation. Giving a leg up is one thing, but permitting the transfer of billions of unearned, inherited wealth with little taxation also forces other taxpayers to make up the difference. While the bottom 99% plus of taxpayers who don't benefit from inheritances in excess of several million don't notice it, they are for all practical purposes subsidizing those few who do. Explain what you mean by other taxpayers subsidizing the transfer of wealth from one generation to the next. Remember, what forced an increase in taxes was the demand by the debt market that the debt to GDP ratio be lowered. This means that for every dollar that escapes taxation, all of the taxpayers must make up the difference. So, voters should think about whether they should pay higher taxes to enable the heirs of the wealthy to inherit vast sums with little tax liability. If they think much about it, I'm confident that most will say that the heirs of the wealthy should be able to inherit unlimited amounts, but that they should pay income taxes on any amount in excess of the exempted amount. I believe that the more that's known about the estate tax, the less popular it'll be. For those who want to know more about the estate tax, please read Payback. It's free. We've covered not only the waterfront, but the entire coastline. Before we end this, are there any other topics you want to discuss? Just one more. Payback includes chapters on tax myths that America's upper income are its makers and everyone else is a taker. Americans are overtaxed, low tax rates guarantee maximum economic growth, and increasing taxes on job creators will cost jobs. I think that Payback does a pretty good job of dispelling these myths. So I invite readers to read them to see if they think that I've made my case. One final question. The title of your book is Payback: Why the Top 1% Must Invest in the Rest and How It Can Renew America. Why did you choose that title? That's a good question to end on. Times have changed dramatically since when I came of age in 1966 and went into the world to chase the American dream. That dream being the opportunity for all Americans to make their way in the world the best they can and live the lives of their choice. In the 1950s and 60s, the market incomes for most Americans was enough for them to fend for themselves without much help from the government, for their education, health care, and retirement. Today, globalization and automation have suppressed the incomes of most Americans and made it impossible for them to fend for themselves. This means that if millions of low and middle income Americans are to have a fair shot at living the American dream, they'll need much more help from the government than my generation. Getting this help will mean expanding social insurance on the same scale as FDR's New Deal and LBJ's Great Society. Because of America's 40-plus years of financial irresponsibility, it'll take a huge tax increase to pay for this expansion. No one has benefited economically more from America's success than its top 1%. Never has the top 1% been as wealthy as they are now, and no one has a greater economic interest in America's continued success than its top 1%. So I believe that for America to remain the world's last best hope, its top 1% must pay higher taxes as an investment in its middle class. Without a healthy and growing middle class, America will fall from greatness, and with this fall, much of the wealth of the top 1% will also fall. Investing in the middle class will be the best investment the top 1% has ever made. That's why I chose that title. With that, I think we can now close.